All right. So when Palantir met with Wall Street analysts to discuss their latest quarterly financial results, there were several big things, big items that I felt like Palantir stock investors need to know these things. These are the things that, at the very least, if they're not going to go through and read the entire conference call transcript, because it can be tedious, it can be intimidating. But at the very least, I would want Palantir stock investors to know these things out of what the company said in the latest quarterly meeting with Wall Street analysts.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.
So the management team said that they repurchased approximately 2.3 million shares as part of their repurchase program. And as of the end of the quarter, they still have $918 million remaining in that authorization. So this usually tells me that the management team believes buying back its shares are a reasonably good use of capital. They're using their own company money to buy back shares of the company. And what that does is it reduces the number of shares outstanding. So existing profits will be split among fewer shares, thereby having the force of increasing earnings per share, all else being equal. And so by management doing that, they're helping existing shareholders increase their earnings per share prospects and also sending a signal to the stock market saying that they believe the shares are undervalued. That signal, of course, is more valuable when you're using money, right? A lot of companies, a lot of CEOs will talk about how they feel their company has great prospects in the future. They feel their company is going to be worth $10 trillion one day. But those are just words. And those same companies that go around boasting about their company's prospects, and at the same time, they're not buying back their own shares, you have to question how transparent they're being with investors about their own feelings about the company's prospects. Are they internally feeling like the shares are overvalued, but they feel obligated to tell you that their shares are undervalued because they're the CEO of the company and they feel like they need to always be hyping up the company? They can't say, hey, look, my company's in a tough position, and if I was you, I wouldn't buy my stock, right? CEOs can't, I've never actually heard a CEO say that, right? In my years and years and years of doing research and following hundreds of companies, and I've read countless amounts of these conference calls as you've seen me do over the last 3 or 4 years. I've never heard one CEO come out and say, hey, investor, I think my shares are overvalued. Don't buy my stock, right? They're not going to do that. And so when they're saying, hey, I think my business is a great value, that's just par for the course. That's just something that every single CEO comes out and says. So we can just ignore that statement from CEOs in most cases. We don't even need to acknowledge that they said that. We can just ask for those few seconds of our lives back. But when they go out and they actually spend company money to buy back their shares, now that's a tangible signal to stock market investors that they feel their shares are undervalued, right? That's an actual reason we can take for the sincerity of a company's management team saying that their shares are undervalued. Otherwise, the words that CEOs say, they just have to do it. It's part of the job. It's part of their everyday thing that they do is go around boasting about the company's prospects. And some CEOs are more boastful than others, but all CEOs are boastful when they talk about their companies to the public, to investors. So that's just par for the course, and we can ignore those. But this statement here from Palantir, I think, is a good sign for stock market investors, especially because valuation is really the biggest risk for Palantir stock investors. It's really the only thing that keeps me from buying Palantir stock is the valuation. If the valuation was more attractive, I would be a lot more interested in buying Palantir stock. Remember, it's trading at a forward price to earnings right now of 175. that's, I think, one of the most expensive companies that I'm following, and I follow over 200, 300 companies. It's an excellent business, but it's also very, very expensive. And so for the company's management team to be going out and buying back their stock, I think it relieves one of the biggest concerns from stock market investors. And I know I'm not the only one out there who thinks this stock is overvalued, right? There's many people that think this stock is overvalued. There's many more actually who think that it's undervalued, right? There's many more investors that are bullish on Palantir stock than are neutral or bearish. And I wouldn't say I'm bearish. I would say I'm neutral on Palantir stock at its current valuation. And so for management to do that, I think is a great sign. It's a great signal for Palantir stock investors. And I thought you should know that because if you own Palantir stock, first of all, congratulations, it's up a lot. And I haven't recommended it as a buy. So kudos to you for seeing value in that stock and experiencing these gains. But as you're holding Palantir stock right now, you're probably feeling like, I don't know, should I sell? Should I take profits because it's gone up so much and there's so much enthusiasm already around Palantir stock? Is it being overdone? Is it overstated? And you might be wondering, and this is a piece of information that could really be helpful to you if you're committed to keep your conviction for the long-term prospects of Palantir stock. So another thing they highlighted that I think you should know about is the company saying that when you use AIP, you will get demonstrably more value than what you're paying for. And this is Palantir's service, right? And this talks about the customer value proposition, which is one of the 6 things I look at when I'm evaluating a business, is the customer value proposition, because that's important to me as an investor to feel comfortable that the company delivers such a good value to its customers that they can sustain that relationship and customers will keep coming back for more and more and more because they feel like they're getting such a good value. And Palantir didn't just say that their customers are getting more value, but they actually proved it by reporting a net revenue retention of 124%, which was up by 400 basis points from the previous quarter. So not only are customers spending money with Palantir, but in their second year of service, they're spending more money with Palantir than they did in their first year of service. And the amount of customers that are doing that are increasing their spending with Palantir as they progress with the company, increased from the previous quarter, which was already really high to begin with. So that is tangible evidence that indeed customers feel like they're getting more value with Palantir than they're spending. So they're spending $100, but they feel like they're getting well over $100 in value. So they keep going back to Palantir. And that's a great thing about the business's long-term prospects. Its long-term sustainable competitive advantage is in its ability to serve its customers effectively, which Palantir is demonstrating it's doing extremely well. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.